So this webinar is called 30 Pillars of Profitable Trading Plan. So I'm just calling my talk Pillars of a Profitable Trading Plan because I've got about 3 or 4 kernels of really important stuff I need to share with you. My passion, besides trading and photography and kids, is helping beginners and intermediate traders. So this talk's for traders who've not yet become wildly successful. I'd like to help you do that. People who've not traded much and want to learn, I'd like to help you do that. And folks who want to improve their trading results. A lot of people can trade, but not all people can make money doing it. I love to teach and mentor and consult. So give me a call. My number is at the bottom of each slide, and it's at the top of my website, which is TimingResearch.com. Here's my phone number. It's my cell phone. I answer it myself. You don't get a salesperson. This is the disclaimer that the powers that be insist you show. So it's all summarizes down to don't trade with money you can't afford to lose. If you can't afford to lose it, you shouldn't be risking it. So past performance is not a predictor of future results. All investing involves risk of loss, and individual investments may vary. The examples provided in this talk may not be representative of typical results. Your capital is at risk when you invest. You can lose some or all of your money. Never risk more than you can afford to lose. And if you click on this, I post my presentation slides on moneymentor.com under appearances. So if you want to see these will be clickable. So read my full disclosure and the details, please. If I could give you one piece of advice, it would be don't trade. It's risky. 10% of the people who try it make money. Rest of them blow their account out. So I'm Sunny Harris. I'm going to tell you how I create a strategy. I'll tell you how I analyze charts and how to design and test a strategy. I'll teach you how to optimize effectively, and I'll show you several of my indicators that govern my own trading. I am a professional trader. I've been for 44 years. I trade stocks, futures, and crypto. And right now I'm long Palantir and NVIDIA and Google. I don't trade options, but I'm going to tell you a little bit about myself, and then we'll get on to showing you how I trade. I've been a professional trader since 1981, through the 41% crash of 1987, the 38% crash of 2000, the 52% crash of 2007 to 2008, as well as the 38% COVID crash, and the coming one. Now, I don't know when that's going to be, but they always seem to come back. So one of these days, there's going to be another crash. I trade the S&P 500 futures contract on 1 and 5 minute charts. So it's pretty fast. And it's said to be a very difficult market to trade. I don't find it so because the NASDAQ's much harder for me to trade. And I've been doing it, as I said, for 44 years. I have long-term stock holdings. That means a week or more to me because trading on a 5 minute chart for 5 minutes at a time makes you think a week or more is long-term in the stocks. And I trade a little bit of cryptocurrencies. I have some free stuff for you here today. If you want a free live trading session with me, it's called Trade Along with Sunny. One means you can come on Wednesdays for free and just text TAWS1 to me at this number. And I'll set you up. I'm going to explain what my indicators are telling me and tell you what, oh no, in the live trading room, I explain what my indicators are telling me. And I tell you what I'm thinking and watching on the charts. Email me if you can't find it, sunny@moneymentor.com. Or click above when you get the PDF. So I will be posting that PDF. Membership to moneymentor.com is free and affords you access to the backlinks pages that are for members only. I do a free podcast called The Sunny Harris Show on Spotify, and I interview notable traders, people who write indicators and sell them people who are authors and trading gurus. And I have a Substack, this is fairly new, called Where is the Dow Going From Here? And I give my free next day predictions. Here's the Sonny Harris Show with Sam Tennis featuring the legends in trading. It's under moneymentor.com/podcast.html. And I've talked with Larry Williams and Jake Bernstein and Steve Nissen and Linda Raschke and Dr. Elder and Cynthia Case, Sherman McClellan, Carolyn Borodin, Greg Morris, John Bollinger, and 42 more. So they're really interesting listens. You can get to know these people as people rather than just as traders. Here's my website, moneymentor.com. And just quickly, I've been named #1 trader twice with 365% one year and 178% the next year. And I was just using my Sunny Bands and my dynamic moving average to do it. You can see right there, #1. In Trade Along with Sunny, it's a daily live trading room by subscription. We start trading for 1 hour at 7:30 a.m. Pacific time. I'm losing my data connection. For 2024, we closed the year out up 482%. Now, keep in mind, this is just 1 hour a day. And I'm up 123% so far for 2025. I grew up dirt poor in Appalachia, in the mountains. Now I have 3 degrees in mathematics, a degree in telecommunications, and I've taken business and programming courses at Stanford, Wharton, and UCLA, and more. I've been programming for 56 years. I've been trading for 44. I originally, right out of college, became a systems programmer for Lockheed, and I loved it. I helped found a little company called ISCO. There were 3 of us, and became the world's leader in computer graphics software. I retired when I was 30 from the 8 years of working at ISCO, and I gave my money to money managers, and they lost $75,000 in 3 weeks. So I decided I can do at least that poorly on my own, and I taught myself to trade. I've read 747 books on trading and investing and economy, everything related to trading. I did not enter a single trade for the first year. I just watched the markets. I just learned to read the rhythm of the chart. And back then I was plotting the charts by hand on a piece of graph paper. And I did publish a monthly magazine for 8 years. I've written 6 best-selling trading books. Here they are. And now I've finished with Sam Tennis, The Definitive Guide to TradeStation's Easy Language and OOEL Programming. It's 1,300 pages in 2 volumes. And of course, I've written articles for all the major magazines and more. These are the covers of the books, if you can recognize them when you look on Amazon. And one of the books that I wrote was called Going Vegan with my friend Linda Blair, the actress. And here are the last 2 books that I've written, the most recent 2. I've been named in the top 10 consultants in Stocks and Commodities magazine and top 10 courses and seminars. I have a little course called Solving the Puzzle. It's 20 chapters. Do it at your own pace. I just told you I was top trader rated by Stark Research, and I belong to all the important organizations. Here, if you go to moneymentor.com, you'll see a button that says Quips, and this is unsolicited emails from people who've learned from me or people who have my indicators. And here's a special one. This guy, I've only talked to him once since then. I didn't talk to him about this at all. It just came. And he says, well, I just want to say I love them, your bands. I've torn apart Bollinger Bands, Keltner, et cetera, and nothing comes close to what you have created. I've talked to CMTs who said, oh, yeah, they're just bullies. And I almost spit out my coffee. I've watched your videos where you're walking new customer through their use, and I got it all understood. The terms are right there. Bullies are too general, and Keltner, which Rasky says she likes, are only a hair better than bullies. Yours blows both of them away. Of course, you already know that. And this is really important because a lot of people say, oh, they're just Bollinger Bands, but they're not at all. I've got a Facebook page where I post important stuff. And if you want to access my predictions, you can go to Facebook and see them. And you can also view the PDF of this presentation on appearances. And I do also post several times a week on Substack. It's called Where's the Dow Going From Here? And we've been pretty accurate. I've got clients all over the world, so don't be afraid to call me. I'm in California, but it doesn't matter. You can call from anywhere. Now we're going to talk about the most important slides in this presentation. We're going to talk about how to make a six-figure income. This is part of your trading plan. So once I finish teaching you how to do this, do it for yourself with your own goals. Now maybe I want to make $1 million a year and you want to make $100,000 a year. So use your goal and do these calculations. Without a goal and a plan, you won't get to your destination. Even if you're using Google Maps, you have to put in your current address and your destination address to get there. There's an old joke that goes, do you know how to make $1 million in the stock market? The answer is start with 2 million. And that joke is not so far off. Trading is a very difficult proposition. Most people lose money doing it. Very, very few traders are successful, and even fewer are successful year after year. Only trade, I'm saying this again, with money you can afford to lose. So here we go, making a six-figure income. 120,000 is a six-figure income. So 120 grand a year. Now we divide it by 12 months. We're going to find out what the bottom line is on this. So divided by 12 months, that gives you $10,000 a month. Now, that looks easier to do than 120 a year because we've broken it down. Now it's only 10 a month. Let's take 20 days in an average trading month. That leaves you $500 a day. That's all you have to make. That's 5 trades at $100 each. So now you know that if you make 5 trades that make $100 each, you can make $120,000 a year. And there's usually between $1,000 and $3,500 per day potential in the S&P going long and short, one contract. So the money's there. You just have to have a plan to get some of it. And then once you've figured that out, you have to do what it takes. Some people say, well, I don't want to watch the computer all day. Well, stay up late, study, get up early, sit and watch the monitor, and stay away from the news and read your charts. So you have to do what it takes if you want that as a goal. You must dance with the market. So the market's leading, you have to follow. Sometimes there are only 3 moves in the S&P. So some only one if you've got a good trending day. So don't try to take something that's not there. You have to know how much money is on your chart. Keep a chart goal of your income so you know how you're doing every day. Draw a straight trend line on it that's hopefully up, and track your day's trades, the day result on your chart. Focus on the present. We're going to create a strategy or a plan, a recipe. We're going to test the strategy by hand or with code. And we're going to prove the strategy. We need to know that it works before we start doing it. If you don't know how to do this, give me a call. I'll teach you real quick. Here's the phone number at the bottom of every slide. 760-908-3070. Last year, as I said earlier, 2024, I made 482% by year end. So we went from $5,000 to $60,000. That's not bad. It was a little rugged there for a while, but we made it. Oh, and did you see that line? See the trend line that I drew? This is how much I had projected that I wanted to make. Sometimes I was below it and struggling. Sometimes I was above it and then back again below it. But I pretty much stayed with the trend line all year. I'm going to show you how to do the steps to designing and testing your very own strategy. So first, let's say, what is a system or a strategy? Actually, you can call it either thing. It's rules. It's a map. It's a guideline. It's a recipe. So you have to write a recipe and you have to follow it diligently. We call it a strategy. And why do we want it? It takes the emotion out of trading. Emotion is what kills everybody. Now I'm going to tell you about the peanut butter and jelly sandwich exercise. I've done seminars all over the world, and I would always take a loaf of bread, a peanut butter jar, and a jelly jar, and a knife with me. And I had everyone in the class write down the recipe for a peanut butter sandwich. Now, I gave them 5 minutes and picked up all the recipes, and I read through them quickly, and I would do the worst one first. So the worst one was always, somebody would always say, use the knife, put the peanut butter on the bread. Well, that doesn't tell you to open the peanut butter jar. It doesn't tell you to pick up the knife. It doesn't tell you pick up the bread and put the peanut butter on it. So you have to specify your rules succinctly. You've got to be able to do everything that it says. So I would always, and then you didn't say open the peanut butter jar. So I would always say, here's the rule, open the peanut butter jar. And I would do it. And then I said, and here's the put the peanut butter on the bread. And I dip my hand into the peanut butter and smear it on the bread. So without good rules, you're not going to be able to trade successfully. Speed and instinct often steal the spotlight in real-time trading, but that's only part of the equation. A well-built system is the true foundation of consistency under pressure. Behind every fast execution is a strategy that's been rigorously tested, fine-tuned, and trusted to perform, especially when the markets move fast. As far as the system is concerned for this presentation, works. Does it work? Works means makes a profit. It could mean simply that the system places buy and sell arrows on a chart. And if you're new to programming your systems, you'll be really happy when it places the arrows on the chart. But then you have to read the performance report and see if you'd actually made any money. So put the buy and sell arrows on the chart is a valid definition for works. But for me, I use the term works to signify a profitable system. So before we visit that, let's view a few charts to see if there are trading candidates. How much money is on that chart? That's an important question. If there's no money on the chart, don't trade it. And what would your hourly wage be if you traded this chart? If it's not greater than working at McDonald's, then I would suggest working at McDonald's. You don't want your hourly wage to be negative. Is it worth trading this chart? Is it worth trading for $3 an hour, $5 an hour? And you've got to know this answer before you can answer these questions. So it's physically and emotionally impossible to catch all the highs and lows. It'll never happen. If someone tells you they can do it, run for the hills. They're lying. The best you can do in the market is like the best you can do in golf. Yes, you might make a hole in one once or maybe even twice in a lifetime, but not more than that. Most people never make a hole in one. But the golf, and this is important, but the golf pros still make a good living at it, right? They don't have to get holes in ones. It's like playing baseball and getting a runner to first. whole lot of those, and you don't make home runs all the time. If you set your sights right, you can make a good living of trading too. There's no such thing as prescience. We all look at the hard right edge of the forming chart, and you've got to know what your rules say to do after that bar. We don't have future data. All we know, and we don't know where the market is going. All we know is past data. There are no future predicting indicators. So here's the next rule. We have to ask what is true all the time. On every new bar, you ask what is true, and I'll tell you what that means. So without a plan, you won't get there. You must have a system. Even if it's just your recipe written down on a piece of paper, you must have it. Otherwise, you're just guessing. So if you want to make $1 million in a year, you need to break this down into achievable milestones. So I'm going to have you, after I explain how to do this, you do your own, and start with your desire is to make $100,000 in a year. It's still really good trading. So you have to know how much money $1 million is. So let's do the exercise again. We'll divide this by 12 months, which gives us $83,000 a month. Now that seems like it's a very high number. So let's keep breaking it down. How much is it per week? So we divide by 4.33 weeks in a month, and that gives us 19 grand per week. Still a big number. Let's look at days now. So we divide by 5 days in a week, and that gives us $3,849 per day. Now, that's a lot more achievable than $1 million a year. So you just can't start at the right-hand edge and say, here's $1 million, and then I wonder how I'm going to make it. I'll just enter trades willy-nilly. No, you've got to follow your rules. So it makes down-to-earth sense if you divide it like this. So to make $1 million a year, we've got to make $3,800 a day, every day. But you can do it. Let's say you don't think you can achieve $1 million a year, do the same process, as I said, with 100,000, and it's still a great achievement. I leave the calculations to you, though. If you have any questions about it, give me a call. I'll explain it again. So this is a very important exercise. I do this before I do anything else. I look at a chart. I ask how much money's on there, what is true by comparing the indicators to the ideal trades, and I do it algorithmically, and I'll show you that in a minute. So how much money is available on this chart? So to calculate it by hand, you're going to yellow highlight all the significant turning points where you would go long and short. Notate each with the price at that level. Subtract the numbers at each short and long turn. So you have 0.1 subtracted from 0.2 gives you the profit and loss on that trade. 0.2 minus 0.3 will give you the profit on that trade. And so you just keep going like that and doing them by hand. Total up the ideal profits. Now keep in mind, these are ideal. This is not what's possible, but it's what's ideal. You want to catch all the tops and bottoms. Or you can do it automatically. I have an indicator called PHW, potential hourly wage, and the goal is to make more than minimum wage. At $500 trades and 6.5 hours in a trading day, that's just $77 per hour. That's a pretty good wage. So here's PHW, potential hourly wage. Can you make more money trading than by working for an hourly wage? The dots on this chart are at the ideal turning points. Of course, we can't be perfect. So from my own work, I take 60% of the ideal as a goal, because I figure I can leave 20% on the table going in and 20% on the table going out, and I'm left with 60% of the trend. Next, we're going to do something called optimization. We're going to find the most profitable input values. So we test every combination of variables from M to N, as they say in algebra, 8 to 9 to 10 to dot, 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 all the way up to 21. So we go from 8 to 21 in steps of 1. And then in combination with the other moving average, 15 to 16 to 17 to 55. So we're going to test all of these possibilities, and that's like 574 possibilities. So the computer can run those possibilities in a few seconds, and it'll take you days to get them all subtracted out. Here are the yellow dots. These are my PHW indicator, potential hourly wage. And you see how it picks off this low, picks off this high, gets this low, gets this high. All these numbers are the ideal numbers. You see right here that the little text, it says ideal equals. So it gives you the number of points and the number of dollars. So the dollars here are 99,215. The PHW, which is 60% of the ideal, is 58,000 something. It took ideally 29 trades, and the date span was 1 year. No, 2 years. So if we can make more than $59,000, or if we can even make $59,000 off this chart, we're doing a real good job. So let's go back and ask what's true on the same chart I just showed you. Where are the moving average crossovers versus the yellow dots? And what are the vertical lines versus the crossovers of the moving averages? I'll show you that. So when I draw a red vertical line, that means a sell. When I draw a blue vertical line, it means buy. Red is sell, blue is buy. So these are all at all the perfect turning points of yellow dot, yellow dot, yellow dot, etc. And those are the perfect trades. Let's see how much this one. Yeah, 59,529 is where if you got all the perfect trades. Now, to do optimization, we're going to ask what length might be better. So we'll start with 8 and 13. Here's two moving averages, and what we're looking for is the crossover of the fast moving average over the short moving average, and down here, the short moving average over the long term. So you can see this is just two simple moving averages. Excuse me, I'll take a drink of water. So this is just two moving averages and their crossovers. And we're going to ask what is true here. So what is true at this crossover? Well, it's late. See, by the time the moving averages are crossed over, you're going long right here at this red bar, which is the opposite thing of what we want to do. Likewise, here's the crossover for a short. Here's the PHW dot, and here's the signal for the short generated by the crossover of the moving averages. And you'll see we held from this bar down to this bar. So that's a pretty good trade. Likewise, this next trade tells you to go short right here. So we would get in at this bar down here and we go short. Now we're holding it through a bad period because the market moved really fast against us. So now we're waiting for a buy entry, and it's here with a quick crossover and cross back on the moving average. And that I call congestion. That's where you can't make any money no matter what you do. Let's do it with TradeStation instead, because that would be a lot of very patient work if done by hand and calculator. So we're going to write the code. And I'm going to show you this code, and you can take a screenshot of it if you want. Or you can call me and ask me for the code. I'll be happy to send it to you. And again, this is for TradeStation. It's actually for multi-charts as well. So the inputs are the values that we tell the program we want it to start at. So fast length of 21, slow length of 55. That's where we're going to start. And then semicolon in easy language says that's the end of that sentence. So the computer knows that's one sentence right there. And then we say if average, meaning the simple moving average, of C, which is close. So if that moving average of the closes over the fast length crosses over the moving average of closed, slow length. So if that happens, then buy next bar at market. End of sentence. What was I going to say? I don't know. So there's lots more in TradeStation besides just average. There's X average and uh, there's 3 or 4 different averages. So then we have another if stat. Oh, I know what I was going to say. Your program should be a series of if then. If something happens, then do something. That's the way that works. So if average crosses over average, then buy next bar at the market. Likewise, if average of close, fast length crosses under average of close, slow length, then sell short next bar at market. And that's all there is to it. So now let's put that strategy that we just programmed on the same chart. And now we see sell arrow, buy arrow, sell arrow, buy arrow. And one of the, if we ask what is true, you can see that these are late. Almost always the signals are late with the default settings. And if you show the performance summary to see how well that system did, it made $54,000 over 2 years. Now that's pretty good. But I'm going to look at some important numbers here in a little while. Profit factor, right here. Ratio, percent profit. And it doesn't show the next one down, but there's another number called the ratio, the average win to average loss. We'll go through these in a few minutes, and I'll show you why it's so important to me. So you want to say, how does my strategy to compare to somebody else's strategy or any other strategy? Or once I optimize, how does my strategy compare to the other strategy I was testing? So I call these my cardinal profitability constructs. This is a construct that shows me how profitable something can be. I call it my CPC index, and it is these 3 numbers I just showed you: profit factor times percent profitable times the ratio of the average win to the average loss. So these, you asked Dan, somebody here asked Dan a little while ago, what's your percent profitable? And he said, I don't take all the trades, but the answer is it doesn't really matter what the percent profitable was. There are 35% profitable strategies that do really, really well. 40% is a lot of what the professional traders trade. If you get up in the 90 to 100%, it's a bad system because it usually has just a few trades and all of your wins are based in one long trade or one short trade. So 80 and 90% systems are not ideal. So in this case, I read the numbers off the screen capture. So its profit factor is 1.73. Percent profitable is 38.1%. So you express it in decimals. And then the ratio, the average win to loss, was 2.81. And that comes out to 1.85 when you multiply all those together. Now, my rule of thumb is it has to be over 1.2. CPC has to be over 1.2 before I would consider trading the system. And this one is. So it's not bad, 1.85. So it's greater than 1.2. And here's what it looks like when you optimize. So I've got L1 for fast length. I'm going to test everything from 8 to 21 in steps of 1. Length 2 is the slow length. I'm going to test everything from 13 to 55 in steps of 1. Now that's a lot of trades, a lot of tests, sorry. Okay, and here's what happens. Now we go up to 62,000. Our profit factor is 2.09. Our percent profitable now is 47, which is above 40, which we wanted. That's good. And let's see. In this case, the profit factor is 2.09. The percent profit was 47%. And the ratio of average win to loss is also 2.35. Anything above 2 will usually, unless you have a really low percent profitable, anything above 2 in these two numbers is a good thing. And this comes to a CPC index of 2.31. That's better than 1 point, what do we have, 89 or something? And it's definitely above 1.2. Now my Sunny Bands trading strategy has a CPC index of 4 usually. So we're going to do it on other symbols and other indicators. We're going to use MACD, which is moving average convergence divergence. And we're going to have fast length and slow length again. And we're going to do the optimization. We're going to ask what is true. We want entries on crossovers calculated with fast length and slow length. And here they are. This is MACD. At the red line, you can see that the crossover was into short territory. And at the blue line, crossover into buy territory. And then we've got another crossover and another crossover here, which is whipsaw. And then we've got a long one here. Every blue vertical line shows you a long signal. Every red vertical line shows you a sell signal. And this is MACD with the standard inputs. And there's the signals. You can see it tells you every time there's a buy and a sell. And the performance report on this one is minus $58,000. So many people swear by MACD, and this one's minus 58,000. So the CPC on this one is 0.3081. And you can see this is under 1.2. So we discard this system, or at least these variables. So now we're going to run 1,000,000 tests. So we're not going to do all those numbers because 1,000,000 tests would take a long time. So we set it to genetic, not, I forgot what word they used, but everything. And the best inputs for this one came out to 3.80 times 0.5. So we've got our ratio, our percent profitable up to 50% times 1.90. And that's 3.61. Now we're cooking with gas. So the best values, I looked them up in the performance report, are 18, 25, and 8, 15, 13, and 11. Now I immediately see that there's a problem with this. Does anybody want to tell me what the problem is real quick in the chat? Okay, I'll tell you then, since you're so eager. 15 and 13 are in the wrong order. 15, the fast average, is greater than 13, the slow average. So that can't be true. So I always put a little piece of code in mine that says, if fast length is less than slow length, then begin. Okay, so that way it won't allow this to happen. But for purposes of this exercise, we'll look again. Now this one, we're up to 98,584. We've got 2.21, which I just showed you, 55.17, and percent, well, the ratio of average win to loss is down further on the page. So what we saw was whipsaw, price indicator moving back and forth with no trend. It's not only difficult to trade, it's a good losing experience most of the time. So you lose money on both sides of a price swing if you're trading during whipsaw. And that last chart was full of whipsaw, which is why we only made 50, why we lost, what did we lose, 35, 55, something. So let's ask what is true now about the crossover signals. During whipsaw, you lose the profits you had during the trending times. And 39 years ago, I set out to cure whipsaw. I wanted to invent a moving average that nearly eliminates whipsaw, and I call it my dynamic moving average. And the reason I call it that is because it dynamically changes the fast and slow length with every tick of the market. So it's computing its own lengths, where you and I would not only be guessing for the right length, we would be using that same length over the whole period of the data, whereas mine changes it. One bar might not be the same average. Well, one bar will generally not be the same as the next bar. So how many times are going to say this? Whipsaw eats up all the profits you made from the trends. Crossovers are late. Moving averages and MACD are very lagging indicators. So rather than optimizing and accepting the whipsaw, this one, like I just said, this one changes its inputs with every tick of the market. Stays out of the way of most whipsaw, not all of it, but most of it. So I've never optimized it. In 39 years, I've not optimized my Sunny Bands and dynamic moving average. I've not changed the inputs, or have I reprogrammed it. It's the way it was for 39 years now. The mathematics has never changed. I've added some nice little features here and there, like analysis commentary and things that are bells and whistles, but I've never changed the mathematics. So Sunny Bands is an offshoot of my dynamic moving average. It allows me to investigate the excursions from the DMA, both favorable and adverse. The bands are average true ranges away from the DMA. They're not Bollinger Bands. He uses standard deviations away from a simple moving average. And standard deviations tell the market where it should go, and the simple moving average is the one with the most whipsaw. My DMA is smooth and dances seamlessly with the market. I use average true range, which asks the market where it has been and is going, not where it should go. Three things are unique about my DMA. Primarily, it's unlike anyone else's moving average. Other people have tried. I've seen, who? In Stocks and Commodities Magazine, John Ehlers has tried it. Harry Kaufman has tried it. Lots of people have tried to create one like this, and so far no one has. It calculates its own lengths dynamically within the mathematics. And the market typically moves as much as it typically moves as much as it typically moves. That's why I use average true ranges. None comes close. Now I'm going to tell you my Sunny Bands rules here. If the market's going up, which I use blue candles for that, and gets above the upper outer Sunny Band and turns red and dips below the upper outer band, then I go short if it's confirmed. And I'll tell you what confirmed means in a minute. When the market's going down on red candles and gets below the lower outer band and turns blue and pops above the LOB, that's where I'm looking for the turns. It doesn't always get to the outer band, either upper or lower. And I'll have to explain those rules to you in person. You can do a Zoom call with me anytime. Well, if I don't have something else on the calendar. So we're looking for it to go from extreme to extreme and reverse. So I go long. If the red candles were going down and turn up, I go short. If the blue candles were going up and turned red. And there are some more complex rules too, but I kind of need to go over those in person. And you can come to my live trading room on Wednesdays for free and see exactly how I use it. So in the same amount of time, if you were looking at these charts, the investor made $168 on that 2-year chart. Trader made $299 per share, and the day trader made $610 per share. So which do I do? If I started with 100 shares, I'd made $16,000. Oh no, the investor made 16. The trader made 29,000, and the day trader made 61 grand. It's all hypotheticals, of course. How do you know that a starting value of 47 cents in 1981 at Apple is going to go to $156? So if that happened, the investor would have made 399%. Now we're talking. But the trader made 635%, and the day trader made 1,200%. That's why I'm a day trader. But I'm also an investor. As I said, I do watch stocks for a week or more. So is any of this possible? Well, yes and no. You can't catch all the ideal moves. It just doesn't happen. It's like hole in one, batting 400. So according to my research, I can only capture about 60% of each move when it's trading, and that's what's reflected as the PHW. Now, I don't like being an investor because you've got to sit through long periods of scary negative markets. Imagine if you've been long this whole couple of weeks. And the trader can go short. That's what protects us. So here's a little 4-page summary of the rules. Again, this is for educational purposes only. I have 3 levels in the rules, and you have to watch all 3 of them at the same time. So the basic rules for level 1 are enter long when red candles have been moving downward and touch the lower outer band, and then turn blue and move back inside the lower outer band if price confirms. I go short when the blue candles are moving upward and touch the upper outer band and turn red and move back inside the upper outer band if price confirms. So there's a chart. So we're watching blue bars go up, touch the upper outer band and turn red. Now by price confirms, I mean that the next bar has to go in the desired direction. In this case, it does. We've got one up here in the upper outer band and then the second one, so we go short. Now, one of the rules also, level 2, is if the DMA, that's the purple and gold lines, if the DMA is flat, then be very careful because it's danger, danger. So when you're flat, on a flat DMA, you have to watch for jumps to go up above it. So we would be short right here and real quick long right here. And you can see that the wick touches the upper outer band and it turns red again. Price confirms and we go short. Short to there. Now we've got red candles, red candles. Here's a blue candle. This next blue candle confirms it because it goes above the body of the prior candle. So we're long. DMA is flat right here. We watch out very carefully and keep our stops tight. And it continues to go on up. Once again, we've got a red bar coming down. This bar confirms it, and we go short. So I just do the same thing over day after day after day and have for 44 years. I do it over and over again. Watch the bars go up, watch the bars go down. Bars go up, bars go down. And I just repeat that. When you're doing it right, trading's boring because you're just repeating the same thing over and over. When you're losing money and following a trade, chasing the market, it's really exciting. But losing money is not exciting to me. So I try to stay with the system and do the same thing day after day. Here's the example for going short. We've got blue candles moving up to the upper outer band, red a candle coming down, confirmed on this one. Actually, another rule, more subtle rule, is if it drops below the upper inner band. So that red candle dropped below the upper inner band, so I went short right there on that one. And we come down, 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 and now we've got another blue candle on the lower outer band. Level 2 is what if the midline is flat? So the angle looks visually sideways to you. That's danger, because I don't expect price to move very far beyond the midline. It may do it, but I'm prepared for it not doing it. So I've got my finger on the sell button. Right here, you can see we hit the lower outer band on a red candle. We did one blue one up, this one confirmed, and we're long. And right here, we're really, really, really careful. We'll stop down below the DMA. So we get short right there. The flat DMA often acts not only as resistance, it acts as a barrier to further movement. Now, level 3 is this is what you have to watch long term. If gold is on top on the DMA and we have a positive slope, that means the DMA is moving upward. We stay long until the gold line is penetrated. So here, we were long here, danger, 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 still long, still long, still long, all the way up to here. This comes down below the upper inner band and hits the DMA, we're out. But that was a real nice long trade. Not just were we long, but it was time-wise, it was a long trade. And on the other side of the coin, if purple is on top and we have a negative slope, we stay short until the DMA, the purple, is penetrated. And that's what this looks like. Purple's on top. We're going down, 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 down. We don't even have a flat DMA, really. We've got one right there. And it keeps going down. And when it gets above the DMA, I take profits. So let's put our yellow dots back on. This is the potential hourly wage. And we have the same values here, $99,000 profit on the ideal. Look where the yellow dots are with respect to where the market turns. We've got our signal right here, second bar in. On the short side, we've got a signal right here. Second bar goes through that. Actually, right over here, we have a signal, but the DMA is flat, so we're very, very careful about taking that one. And it drops back off of it. And right here is another buy signal, confirmed right here. So we go long on this bar, and we write it up to the upper outer band, and the yellow dots right there. So Sunny Bands is really tracks the market very well. It's very consistent. And yes, it's a little bit expensive. I'll defend myself before you do, before you ask the question. It's a little bit expensive, but that's because it works. You can buy cheaper systems that don't work all day long. These are not 5-minute charts, they're daily charts. Somebody asked that. All right, so we asked what is true over and over and over again. So you can see there where the trades happen. Short, long, short, long. And see how many, there are fewer trades on this than there were on the moving average or the MACD chart. Fewer trades because it doesn't whipsaw us back and forth. So another thing you need to know is that my indicators work on any symbol, on any time frame. Yes, 5 minutes. Yes, 15 minutes. Yes, daily. Yes, weekly. It works on everything. And yes, it works on crypto. Yes, on stocks. Yes, on futures. I use TradeStation for my brokerage and my software and my programming software, Easy Language. So they no longer have Forex or crypto on TradeStation. I hope they're thinking about putting it back, but they took it off for some sort of compliance rules. So when they're back, yes, it trades on those too. Here's the liquidity, futures liquidity table from Stocks and Commodities Magazine. And you can see right here why I trade the E-mini. It is the most liquid contract in the world. See how the dots go all the way out to the right, and then there's two greater than symbols telling you there's even more out beyond there, but they can't print it on the page. So because this is the most liquid contract in the world, you can get in and get out with some assurance that you're not going to get too bad of a fill. 10-year note is next. 5-year note is next. 4, 5, 6, 7, 8 is the NASDAQ. So see, you're already pretty far down on the liquidity table by the time you get to the NQ. And the reason I trade the E-mini again is not only because it's the most liquid in the world, but because I say don't buy something you can't sell. So if you can't get rid of it because there's not enough contracts being traded, what good is that? So I'm going to put this on radar screen, which is looks like an Excel spreadsheet. So I can tell which ones we should trade. So I have a spreadsheet, PHW total. I can double click on that and it'll sort them for me. And the ES, I'm making 32,000, on gold 24,000, and on crude oil 1,300, almost 1,400. So I put 50 symbols on this and sort through them every day. So what do you think I trade? Of course, the one with the most profit. There's only one reason to trade, and that's to make money. And people ask me all the time, if you trade, why don't you sell indicators? Do consulting. I do consult. I do sell my indicators. Why do you still trade after 44 years? I saw one, I think it was on Facebook, somebody commented, she should retire. Well, I've been retired for 44 years. And I've been asked these things many times, but I like to give back to the industry that's been so kind to me. I mean, I've done really well doing this, and I like to help other people learn to do it. And I enjoy it every day. I still like making money. Speaking of money, I don't know if I can't go through this because it's too long now, but if you have a profitable series of trades, it's possible with strategic compounding to greatly magnify the profits. This is something I call ultimate F. It's the ultimate fraction at which to increase your contract size to get the most profit. It's reminiscent of Ralph Vince's optimal F, but without the enormous risk of his drawdown. And so I started trading in the live trading room at 5 contracts, and we're together for 1 hour. And I trade with double the margin. So when the margin went up to $6,000 recently, that means I had to have $12,000 in my account. Now it's back in the $2,000 range, so I keep $5,000 in there for that one. So that's what the last year looked like. Here's what the spreadsheet I keep all this stuff in looks like. And here's what the chart looks like on those trades. So that's the uncompounded. It's just trading one contract at a time, 1, 1, 1, 1. And the red one is with the ultimate F compounding. Yes, you're going to have drawdown, and you always have drawdown at the highest number of contracts. But look at the difference. We're above 200,000 here, and we're above 50,000 on the 1111. So let's speed through that because I don't have much time. And that's where that spreadsheet looks like. So come to my website, moneymentor.com. And if you buy one of the bundle packages, you get a free month subscription to Daily TOS. So every day for an hour, every morning of the month. That's a $395 value. So you get that for buying the discounted bundle. Sunny bands and the histogram are included in bundle 1. Normally, the two of them together cost $52.11. Today, only $46.89, plus $395 for TOS. So what is that? 5,000 something. But you only pay $46.89. That's saving $917. So everything I sell, I develop for my own trading. I develop it for myself, not for you. But I like to make them available because they work so well. I want you to be able to do it too. That's the sound you hear in the background. Is my little.
The time is 3:00 p.m.
Lots of sounds in the background. So that was Bing ticks, which tells me audio, whether the market just went up, whether it went down by a different sound, and how fast it's moving. So if it goes bing, 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 I know the market's not moving fast enough to trade. If it goes bong, 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 I know it's going down fast. So I teach you exactly how I use these indicators. I don't hold anything back. There's lots of people, including magicians, who will tell you part of their strategy and not the rest of it. So you can't make it move and work because you can't figure out what the missing rules are. I don't do that. I train you to use them for free. We do 2 free Zoom sessions. You buy the indicators or take them on trial, and I spend two Zoom sessions with you to help you learn to use them. If you want to text me at my phone number again, free trial, I'll set you up with a free 7-day trial to the indicators, and get on Zoom with you and show you. We'll help you install it and then show you how I use it. Free entry to trade along with Sunny. On Wednesdays, I'll let you in for free on a guest pass. But if you want to do daily, it's $3.95, and that's free if you buy bundle 1. So text guest pass to me, and I'll get that to you. This offer is good till the end of, oh, that says March, till the end of May. We're in May, right? So till the end of May, I'm letting you do this free trade along with Sunny and bundle 1. There's my phone number one more time. Use it. And I'm just going to go through this pretty quickly because now we're to the part about questions. I haven't seen any text come across. Does anybody want to ask a question? Put it in the chat and I'll answer it. And it looks like nobody's here or there are no questions. What is true? All right, I'm going to give you my info. Go ahead, David.
You might have already asked this, but someone asked if those are 5-minute charts.
No, they were daily charts. I did answer it.
Okay, just making sure.
All right, thank you everyone for attending. Thank you, David and Timing Research, for hosting the events. You give such good events. I really enjoy them.
Oh,
and
thank you.
I enjoyed talking.
Happy to have you here.
So I'd love to visit. Give me a call. Here's where I am. I'm expecting some texts. Okay. Do I take monthly payments? Yes, I have a 3-month payment plan. Or just like Dan said, you can pay for it on your PayPal credit card and break it out over as many months as you want to. All right, everybody. Thank you so much. I really appreciate the opportunity.